Here's a detailed guide on the key parameters to check while shortlisting a large-cap mutual fund in India. Large-cap mutual funds invest in top 100 companies by market capitalization in India. These companies are financially stable, have a strong market presence, and are less risky compared to mid- and small-cap companies. Large-cap funds are ideal for steady returns with relatively lower risk. But how do you pick the right one? Let's break it down into a few simple steps. 1. Past performance. Check how the fund has performed in the past. Though past performance doesn't guarantee future returns, it gives an idea of the fund's consistency. Look at 5-year and 10-year returns. Funds with consistent performance over the long term are better. Rolling returns. These show how the fund performed over different time periods, like 3-year returns calculated daily. It helps avoid bias from specific market conditions. Example: SBI Blue Chip Fund has delivered 12 to 14% average annualized returns over 10 years. ICICI Prudential Blue Chip Fund consistently beats the benchmark over the long term. 2. Expense ratio. This is the fee charged by the fund house to manage your investments. A lower expense ratio means more of your money stays invested and compounds over time. For large cap funds, look for an expense ratio below 1% in direct plans. Example: UTI Nifty 50 Index Fund has an expense ratio of around 0.2%, which is among the lowest in the large cap category. 3. Risk-adjusted returns. It's not just about how much return a fund generates, but how much risk it takes to achieve those returns. Sharpe ratio. Higher is better. It tells you whether the fund is giving better returns for the level of risk taken. Standard deviation. Lower is better, as it indicates stability. Example: Axis Blue Chip Fund has a high Sharpe ratio and lower volatility compared to many peers, making it a safe option for investors. 4. Fund manager expertise. The person managing the fund plays a crucial role. Check fund manager's track record. Look at their past funds and performance. Stability. Frequent fund manager changes can disrupt performance. Example: HDFC Top 100 Fund, managed by Prashant Jain till 2021, one of India's most experienced fund managers, showed consistent performance under his leadership. 5. Portfolio quality. Analyze where the fund invests. In large cap funds, expect high exposure to blue chip companies like Reliance Industries, HDFC Bank, TCS, Infosys, ITC, etc. A good fund will have a diversified portfolio across sectors like banking, IT, FMCG, and energy to reduce risk. Example: Mirae Asset Large Cap Fund holds a well-diversified portfolio with 50-plus stocks spread across multiple sectors, ensuring stability. 6. Consistency over market cycles. Choose a fund that performs well in both bull and bear markets. During bull markets, it should capture gains. In bear markets, it should protect the downside. Example: Nippon India Large Cap Fund shows resilience in volatile markets and participates in rallies effectively. 7. AUM, assets under management. A fund with too low or too high AUM can be problematic. Too low may indicate the fund is not popular or lacks trust. Too high, rupees 30,000 crores, may face difficulty in finding growth opportunities. Look for AUM between rupees 2,000 crores and rupees 20,000 crores. Example: Mirae Asset Large Cap Fund has an AUM of around rupees 37,000 crores, but still delivers consistent performance due to efficient management. 8. Benchmark comparison. Always compare a fund's performance with its benchmark, like Nifty 50 or BSE 100. A good fund should consistently beat its benchmark. Example: Kotak Blue Chip Fund frequently outperforms its benchmark, providing better returns. 9. Investment style, active versus passive. Active funds, managed by fund managers aiming to beat the market. Passive funds simply replicate the index, e.g., Nifty 50 Index. If you want lower costs and predictable returns, go for index funds. Example: UTI Nifty Index Fund, a passive option with low expenses and steady returns. 10. Exit load check, if the fund charges an exit load when you redeem your money. Most large cap funds charge 1% if withdrawn within 1 year. Final thoughts. Choosing the right large cap mutual fund is like picking the right car. It needs to match your goals, risk appetite, and time horizon. Stick to funds that are consistent, low cost, and diversified. Also, remember to review your portfolio yearly and make adjustments if needed. Top picks for large cap funds in India: SBI Blue Chip Fund, Mirae Asset Large Cap Fund, ICICI Prudential Blue Chip Fund, Axis Blue Chip Fund, UTI Nifty Index Fund. With this checklist, you're all set to make informed decisions and grow your wealth steadily. This information is for education purpose only. Kindly consult an investment advisor or do your own research before taking the final decision.